Hello everyone, it's me Raveendra Hegde and you are watching Financial Management. Dear friends, today let us discuss about the basic and general objectives of financial management. Here the basic objectives are damn important and they are profit maximization and wealth maximization. And general objectives are not so important, but from the exam point of view, the basic objectives profit maximization and wealth or value maximizations are more important. First, let us discuss about profit maximization. It has traditionally been argued that the primary objective of a company is to earn profit. So, the objective of financial management is also profit maximization. Every business or manufacturing enterprise has a profit motive. Therefore, every entrepreneur is interested in maximizing his earning. So, the objective is large amount of profits. Now, let us see the advantages of profit maximization. It is easy to understand and also easy to calculate the profits. It is easy to determine the link between financial decisions and profits. It is rational as well as natural objective of an enterprise. An economic activity is performed by an individual for the purpose of obtaining some benefits or deriving some utility. The benefits expected in the field of business are measured in terms of profits. So, profit maximization is a rational and natural objective. This objective results in cutthroat competition in the field of business and ultimately profit making concern survives. Profit maximization goals ensures efficient utilization of available resources. Dear friends, high productivity increases the profitability of an enterprise. Therefore, an enterprise aiming at maximizing the profit has to use the resources effectively and efficiently. But profit maximization also have some disadvantages or limitation. It's a vague. It's a vague term. The definition of the term profit is ambiguous. It is not clear whether the term relates to economics profit or accounting profit or profit after tax or profit before tax. It ignores the timings of returns. Profit maximization objective disregards the time value of money. While selecting the investment projects, the project which yields higher benefits in the earlier period should be selected, though its earning capacity may decline after some times. An enterprise seeking to maximize the profit should also take into consideration time factor because a rupee received today is more valuable than a rupee received after a month or a year. It ignores the risk factor also. It emphasizes the short term gains. It requires immediate resources. The term maximization is also vague, it's also ambiguous. Now, let me show an example which reflects the time value of money. I have two investment proposals here, investment proposal 1 and proposal 2. No need to take these examples. You can see in the example the total return on investment over the period of 3 years is identical. But year wise, benefit is analyzed. Proposal 1 yields rupees 10,000 in the first year only, whereas proposal 2 earns nothing. In the second year, the yield is same in respect of both the investment proposals. Thus, investment proposal 1 gives more returns in earlier years, whereas proposal 2 gives higher returns in the later years. Benefits received earlier are more valuable than benefits received after some years, because the benefits received earlier can be reinvested and yield can be multiplied. This is called as time value of money. But profit maximization objective ignores the time value of money and also quality aspect of benefit. Profit maximization objective makes no discrimination between amount received today and amount received after a year. Since profit maximization objective suffers from so many drawbacks, it is considered to be an inappropriate and unsuitable operational objective of investment. Wealth maximization objective is widely accepted because the primary goal of a firm should be to maximize its market value, and implies that business decisions should seek to increase the net present value of the economic profits of the firm. This objective not only gives due consideration to the time value of money but also handles the problem of uncertainty of expected benefits by measuring the benefits in terms of cash flow and applying the appropriate discount rates. So, the main objective of wealth or value maximization objective is highest market value of shares. The value of a firm can be calculated by using the formula number of shares into market price of the shares, or value of equity plus value of debt. You will come to know pretty soon in the coming chapters regarding these issues. Now let us look at the advantages of wealth maximization objective. It is clear and no doubts, unambiguous, emphasizes the long-term gains, recognizes risk or uncertainty, recognizes the timing of returns, considers shareholders' return also, reflects dividend policy of a company. It is clear and unambiguous because wealth maximization objective takes into consideration the present value of future benefits arising from an investment project. Wealth maximization concept does not consider benefits received over different period of time as equal. It is well accepted fact that amount received today has more value than the amount received after some time. So it takes into consideration the time value of money. It reflects dividend policy of a company. That means this objective emphasizes the market value of the shares. Wealth of shareholders is said to increase when the market price of their share increases. The market value of the shares depends upon the consistency and the rate of dividend payable by the company. So, a company following wealth maximization policy has to pay dividend regularly, that too at reasonable rate. But wealth maximization objective has some limitations, has some disadvantages. It offers no clear relationship between financial decisions and share price. It can lead to management anxiety and frustration. Now let us study the conflicts in profit versus value maximization principle. So on the screen you can see the objective, advantages and disadvantages of profit maximization and wealth maximization objectives we already discussed. So by looking at the advantages and disadvantages, one can say out of the two objectives in today's real world situations, which is uncertain and multi-period in nature, wealth maximization is a better objective. Profit maximization can be achieved in the short term at the expense of the long term goal, that is wealth maximization. Now let us see the general objectives. They are not so important. The general objectives of financial management are to protect liquidity and solvency of the firm, to utilize the available financial resources effectively, to promote social welfare, to build up adequate reserves for financing growth and expansion, to ensure a fair rate of return on investment of equity shareholders. So today we have understood the basic objectives of financial management, that profit maximization and wealth maximization. If you have any doubts, just drop a message to my WhatsApp number. Thank you so much.